Hello there, I'm Cortland Mallory and this is the Straight Facts Podcast. Today, our episode is stocks. What are they? How are they created? And I'm gonna help you with that now. So, when you start a business privately held and you're looking to grow and take in more public investors so that you can grow your cash flow, you're going to want to send out a stock. Now, how do you actually do that? The first thing you're gonna need to do is partner with an underwriting firm. Typically, you're gonna partner with the investment banking arm of a broker or dealer. Once you do that, the underwriter and underwriting team will fill out a preliminary prospectus. This preliminary prospectus goes to the SEC, the Securities and Exchange Commission. This is a United States independent business that's primary focus is to regulate the market against market manipulation. Now, I know I just throw a whole bunch of huge words at you. I mean, what does any of that mean? Well, essentially, a company needs to be verified from the business that the United States has to essentially protect us, you and I, as investors. And they need to verify that this business is in good standing and has all of its boxes checked, so to speak, so that you can buy the stock. This includes a run of show. So this road show, so to speak, is the process of the underwriter actually saying this is what the stock is valued at, or what we think it's valued at, and it's the period of time that they give afterwards to allow investors to react. So for example, if I were to launch my IPO and our underwriter valuated the stock at $20 per share, they would take approximately 2 weeks to a month in a road show or a run of show to see exactly how you and I react as investors to the stock. It might go down to $50 per share, it might go up to $25 per share, but it's during this time that the underwriter validates their original idea with market evidence. Once that's passed, well, you're public. You've launched your IPO, your initial public offering, and you're ready to go. So now that we know how stocks have been created and what they're good for, well, how do I invest in them? Essentially, the name of the game in the stock market is buy low, sell high. Things go low, then they go higher. You make money on the multiplicative difference of how high it gets. There's also a thing called short selling where you do the opposite. Stock is really, really high. You believe it'll go down. You'll make money on the difference from where it starts going higher to lower. These are both trades that you can make, but a lot of people's questions are, how do I actually do it? I mean, I get it, like I could do it, but how do I do it, right? You have a few options. There is your phone and your laptop. Now, if you want to cut to the chase, the laptop is the way to go. But if you want to get started investing and you want to have quick, easy access to the market to understand exactly what assets you're interested in are valued at today, right now, I suggest having an app, if for no other reason, just that reason. And so your choices are things like Robinhood, things like Stash, right? Things like Acorns, and there are even banking apps that'll allow you to invest, like Cash App, or even SoFi. So by using any of these different platforms within the week, you can sign up, get verified, connect your bank account, add money to your pretty much middleman account, and then execute on trades once your money has been cleared. Now, if you're looking to be more of a big time investor, or if you're looking to go more of the institutional route, you should look to have one of the approved brokers that we have here on screen. Now that we know how, right? How do we invest? Well, we've got many different options. We can use our phone via Robinhood. We could use our laptops via one of the trusted brokers that are big time. But how do we learn about stocks? I mean, it's one thing to know about how generally a stock is made. I get it. The SEC basically checks them out and sees if they're all right. That's good. I get how to watch the market and how to invest in it. I downloaded the app and I got maybe $100. Maybe I've got $50 in an account and I'm looking to get started. This is good. But I don't know anything about stocks. How do I actually learn which stocks to invest in, right? So the name of the game is remember your industry. There are things that are important to you that you understand. I'm not sure what it is. This is a question only you can answer. Is it makeup? Is it video games? Is it education? Is it sneakers? Is it cars? Is it car parts? There are many different things in the world that you know about because that is the source of your passion, and that's where you should seek to invest. So invest in what you can understand in. Utilize Google. Utilize the actual peer review section of Google and also your peers. Ask people around you, what do you know about different companies? What's been happening in the news as far as you know? Research specific companies that you're in, that you're interested in, right? Look into their CEO and their managing directors. I want you to look at their upper management. What kind of culture do they have within the organization, and what is their plan for the future? These are things that you want to know about so that you can basically pull together, this is a good company to invest in. Let's use a recent example in the GameStop stonks, right? And we're gonna colorfully call this stonks now, right? Everybody loves calling them stonks. What happened with GameStop is you go to a physical location and you buy an actual disc for your gaming console, which as a concept has just been lost lately. You can usually download your games directly from the source. But also you can trade in old games, buy equipment, as well as entire consoles for gaming, which still has its purpose and its place in people's hearts, but just like everything else, you can do all of that online. So coupled with terrible returns from trading in your items and the fact that the business model is archaic and tied to brick and mortar, it's just been on a steady decline and folks haven't been using it too much. Now, as of recently though, thanks to a group on Reddit who have been targeting short squeezes, they noticed that this short squeeze actually created an infinite money opportunity. Now, if you don't know about shorting stocks, a short sell is, like we mentioned earlier, when you place a particular type of buy, right, on a stock. It's actually a sale, where if the stock goes down, you make money on the difference as it goes down instead of when it goes up. So many giant companies that have tons and tons, we're talking billions of dollars, continued to short the stock. And by shorting the stock over and over and over, it sent an indicator to all other investors in the market that this company is going down, that it's not worth investing in and you shouldn't put your money here. Now, they did that to such a degree that there was more of a short than what stock existed. Now, this is why we call this an infinite money glitch. As soon as that number went from a short squeeze of 99% to 101%, money was created that did not previously exist in the market. Let me say that again. Exactly at that point, money was created in the market that did not previously exist. This means that for no real reason, not because GameStop did anything or changed anything, it was really because a bunch of Redditors wanted to stick it to the man, so to speak. But this stock went from pennies on the dollar, maybe $1, $2, to $300, upwards of $300, which, as you can imagine, made tons of people a ton of money if you can do the math behind it. So what do we learn from that? We learned that in this day and age, investing is really risky. Not every stock that blows up is actually tied to any sort of research that makes sense. I mean, on paper, it doesn't make sense for GameStop stock to have blown up the way it did, and it still doesn't. The only reason it did is because the market works separately from the way a business actually operates. And that's what's important about stocks. So when you learn about a company, just know that you don't necessarily learn about where the stock's gonna go, and that there are other factors that matter in that conversation. So don't be too scared. The name of the game is invest your money and be patient. Look, if you know me, you know I love cryptocurrency, and if you're looking to get started investing in crypto, get $10 in free Bitcoin when you sign up with my link down below for Coinbase. Coinbase is a cryptocurrency broker that lets you invest in the main ones that you've heard about in the news, as well as tons of altcoins. So click the link down below, get started with me, and I look forward to seeing you in the market.